Thank you for tuning in to the Volcker Report end of day analysis. We're looking at the Dow futures contract. And as you can see, the market has made a high as of March the 2nd. And now the market has started a downtrend channel. And today we ended with an inside day, a narrow range inside day. Normally, with the narrow range inside day, the following trading session there is a breakout or breakdown. So either we're going to rally from this point or break down from this point. One thing to note from the technical aspect is that you may want to consider what type of a candlestick pattern you're looking at. The one you're looking at right now is resembling what is called a spinning top. And this is usually when in the trading day there is a little price action, what we also call a narrow range day. And if this occurs during rallies or near highs, it could be a sign that prices are losing momentum. So this is almost saying that, excuse me, this is more so a confirmation that this top is actually the top. We'll know more in the next trading session, what happens. I believe we're going to come down here. We've already dropped below the trend line here, okay? The support trend line, we already dropped below that. And now we have first support here at the top of the Kumo cloud. The base of the Kumo cloud is, you can see that the distance between the top and the bottom is a narrow range, also in the cloud. So it's not really a strong cloud, which means it's not really a strong support, and the market could crash right down in there, right below here with no problem, and get down into the low 17s with no problem whatsoever. Because we're retracing now all of this movement. So technically speaking, support is way back here somewhere around 1793, 1782. We'll just round it off and say 1700 even. So about 1700 even is where your support is going to be. Even if we take out these lows here that were made back in January of this year, you still have the bottom of this old Kumo cloud support here. So again, the market could actually drop down into the 16900s and still have an area of support there, if that makes sense to you. So that's what we're going to be looking at in the Dow futures. Basically, you should have been getting some sign here. You had the first short here, the next short here, and the next short here. So you've been getting warning signs of exhaustions and shorts coming into play here. Even on the way up, you were getting warnings. Here you got one, and then we followed through. Then here you got one, no follow through. Here you got one, no follow through. Here you got one. You kept getting these signs that people were building some short positions, and then it came to fruition here. Okay, let's take a look at the Nasdaq. Okay, a few things to note about the Nasdaq 100 futures contract. Contrary to belief, the Nasdaq did not test 5,000. That was the Nasdaq Composite Index. We track the Nasdaq 100 index. The Nasdaq 100 has not hit 5,000. It still has roughly 500 points to go before it can say that it has now touched the 5,000 again. We technically topped out at 44.83 and a quarter. All right, 44.83 and a quarter on March the 2nd. Since then, just like the Dow, it's come off here. It has a little bit further ways to go from its Kumo cloud first level of support, and it's also a narrow range cloud as well, but it's still a ways off. We still have about another 100 or so points to go in the Nasdaq before it even touches this cloud here. All right, so same technicals exist, except for on this one, we did not get a spinning top close on the day. We just had weakness going into the close. Even though we settled a few points off the low of the session, it still did not confirm confirm the top with the spinning top like the Dow did, because it still has more downside to go here. But we know this is definitely a top. All right, we got the signal here, and then we got the confirmation with the downtrend channel here. So again, you got room to fall here before you see any type of a bottom put in, unless the Fed comes in and does something else. It seems like the Fed will not allow the market to fall, but so much before they intervene. And the PPT has been very busy, as you can see. This is sort of like an orderly fashion that we're coming down. It's not just this, big, gigantic, long parabolic bars coming down. This is a orderly correction, almost as if the correction is being managed electronically, if you will. All right, just something to think about. Just something to pay attention to and watch. All right. On the next correction, depending on how far we go, as of right now, your next area of major resistance is going to be here. All right, around the 44.69 and a half, meaning that the market's going to really struggle to even get back to the previous high, which means it will not. It will form like a head and shoulders, a double top type thing, and then we really fall back down. So once again, the Nasdaq 100 did not hit 5,000. That was the Nasdaq Composite. You need to remember that. Okay, now let's turn our attention to the US dollar index futures contract. If you recall, those of you who have been following me for some time, not only did I warn you on the last week's on Charlie McGrath's radio show that the metals were preparing to take another nosedive, but I also warned that the US dollar was going to reach parity and that the euro would drop below parity. Well, today, on March the 11th, 2015, the US dollar index futures contract went well over parity. We hit parity 0.54. So that is amazing. We finally went over 100. And it did it in such a parabolic way. So that means that the parabolic rise, we don't know if this is just the beginning or is it going to, crash and burn from here. The way that it's looking though, with all the power involved in it, I would say this looks like just the beginning of the parabolic move. And we could possibly, at this rate, just measuring the burst and the force of the explosiveness of this move from March the 4th until March the 11th, all things being equal, with the force of this move, these bars here, this move, all right, is the same identical explosive move we saw back in 2011 in the metals, in the silver, to be exact, gold and silver, especially that silver. It parabolically moved like this. Big, big parabolic bars in a row. When that happens, that means this is the beginning of something, and we don't know where it's gonna go. That being said, though, if this is the case, then we will see all-time contract highs, which means we're gonna get up to the 140s, man. Maybe even 160s. The euro did it. The euro hit 160. Why can't the dollar? The last time we seen the 120, 30s, and 40s in this dollar was back when I started my Wall Street days, back in the 90s, in the late to mid 90s. So, wow, that would be amazing if that happens. So we just have to keep watching, see what happens. But right now, man, the only position in this is long. You don't want to get caught and be the last man standing when the music stops on your long position. So you have to do stop and reverses. I mean, that's just no brainers there. But your real position is long here, and we have not topped out. If we go back and measure the move here, I can't see the last topping signal. I don't see it. So you have to go back a ways. Let's see here. All right, did I just pass it? Let me see. Let me go back. Man, okay, looks like back in 2013 when we were at that 84, that was a soft top. All right, here we go. Back here. Yep. Wow. I would have to load more data to show you more, but we really haven't had a U-turn in the dollar in quite some time. Yeah, I don't see a U-turn here. Now, it's looking like we may try to do a U-turn here. That's the only other caveat. See how these two lines are getting closer, closing in? If they turn down, then yeah, we have a top. But I don't think that's what's going to happen here. Not at all. I think if anything, these two lines may cross each other, and then this line extends higher, and this one goes that way. But this is as bullish as you're gonna get. Um, this is incredible. All right, let's finish up with the oil. Okay, this is a crazy chart in the oil. We got zigzags all over the place. This is what we call a super consolidated market. It is range bound and going absolutely nowhere, and all it does is extends the width of the range. Look at here, bottom sign. We got a bottom. We got a top. 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 Then it came and topped again. Now here we are trying to find a bottom. Will today be the bottom? I don't know. We're going to need another day to see what happens. Maybe if we take out maybe today's high of 49.03, then yeah, this might be the bottom. But again, when we say bottom, we just mean of this leg. See, you have these downtrend channels, you have these uptrend channels. One bar downtrend channel, basically a one bar uptrend channel. So sometimes the channel is only a bar or two wide, or I'm sorry, in length, and then other times you got multiple, one, two, three, four, five, like this one. So even though this low took out the previous lowest low point, it's tying with this one. This low here was 47.38. Today we hit 47.33. So we just took this out on a spike. So this could very well be the bottom of the range of the new range now, and then the top of the new range is here at 54.20. So we have a range from 54.20 down to 47.33. That's $7 or 700 points. That's that's phenomenal. $7 range here that you're just banging up and down on, going absolutely nowhere. So really, I can't call it. All I can say is it's a day trade situation where you're constantly getting long and short and stopping out and reversing and taking little bits of profit here and there. So it's a busy market. You got to be on your toes and constantly have your tickets working and cancel replacing, almost like you're day trading. So that's about it. Um, just remember what I said, where we're going here, and I will be on Charlie's show tonight at 8 p.m. Eastern Standard Time on Wide Awake Radio. So thank you for tuning in, and remember, take what you can, give nothing back.